Hi friends, this is Kishore. Welcome back to my channel. Today's topic is debt ceiling crisis. Is this really a crisis or are we feeling on it? Let's see what is the debt ceiling and what is the current national debt level. History of debt ceiling, what happened in 2011, debt ceiling issue, what we learned from the past and what are the various debt ceiling scenarios, how bonds and equity market reacts with the debt ceiling. I'll try to keep it simple, clean and crisp. Hope you like this video. Let's jump into the show. What is debt ceiling? Debt ceiling is the total amount of money that the United States government is authorized to borrow to meet its requirements. No other country or bank sets a limit to the America. You should use this much money only. America government itself sets a limit on its own, says that we should not cross this limit to meet our requirements. Who held this debt? So the debt is held by either by public or by government accounts. So whenever the treasury needs some money, some funds, which is more than what they have, then they issue the securities, and this securities held by either by individual investors or mutual funds or a financial institutions or the foreign governments. Also, government accounts, they borrow the money from their trust funds or the social security system or the Medicare system. What is the current national debt level? So the current national debt level is 31.4 trillion, and this is already ceiling touched on January 19, 2023. And the Treasury announced debt issuance suspension for a period on January 20th, which means they already touched that limit, but they are using some extraordinary measures to uh, fund the economy. And out of that one 31.4 trillion, 24.6 trillion is held by the public and 6.8 trillion is held by the government. This is the usdebtclock.org website. It shows like what is the current US national debt and how much we need to rise on June 1st, or what is the expectation. So based on to meet the current commitments of the government, they need either 1.9 trillion to 2.2 trillion. And this chart talks about tells about what is the debt limit, debt subject to limit, suspend debt limit from 1945 to 2021. So the debt US debt is growing from zero to almost 30. It's all about in the trillions. So before knowing like what are the options government have or can take on the June 1st, let's see the history of the debt ceiling. No other country in the world has this debt ceiling concept. Only America has it on its own, and it started in 1917. Before that, whenever the president needs some money, he requests the Congress, and Congress reviews that proposal and they send the money, and president oversees the actual spending of money. But during World War One, President Woodrow Wilson thought this is taking too much of time, and he asked Congress, "Let's give me a big number, and me and my advisors will take a decision and take the best way to handle the debt." So from 1917 till today, there are 78 times the debt ceiling raised. Out of 78 times, like 49 times it raised by Republican presidents, and 29 times it is raised under Democratic presidents. But in 2011, during debt ceiling crisis, the government took a long time to take a decision. The debt ceiling rise, and economy went to uncertainty. And S&P downgraded the credit rating of the United States government for the first time in the history of the country. And based on the past, what we learned is government should not take more time, or they should not extend to take a decision on the debt ceiling, because it causes uncertainty in the market, and it impacts the bond market and the equity market. So on Jan 2023, it's already debt ceiling limit is already touched. So by June 1st, all the extraordinary measures will evaporate. So by June 1st, as early as possible, government should take a decision on the debt ceiling. So this chart talks about Treasury bill yield curve. It is going down, means the bonds are going up. And this is US government bond insurance premiums. They're going up in last couple of weeks because of the uncertainty. So what are the options government have, and what are the risks associated with each option? Option one, not raising the limit, which means government should not raise the limit and says government is going to default. So which is a not a option. Government should do this one. I do not expect government take this kind of option. And option two, Congress either suspend that debt limit, says that temporarily suspend that limit and use the funds and do the all the services, all the things as they do. But this creates some uncertainty in the economy, and as I said earlier, 2011 what happened, we maybe repeat the same. And option 3, Congress raises the debt ceiling, means they raise the whatever the limit we are expecting, like 1.9 to 2.2 trillion to meet the current requirements. They raise that amount and says, uh, if you write this one again, we'll look into that. So I'm expecting this is the option they're going to take, but we do not know. We cat will be out of the bag on June 1st, and we'll know like what is the option government is going to take. So this is all for today. Hope you like this video. If you like this video, please like, share, and subscribe. I'll leave my Twitter account in the description. Please follow me on the Twitter. Thank you so much. Bye bye.